Welcome to the Art of Succession podcast with Barrett Young. Join us as we explore the strategies, stories, and insights that shape the journey of leadership transitions and business success. No matter where you find yourself along the journey, this is the podcast where you'll find the tools to make it happen.
You can buy goodwill, but that doesn't mean that it exists, right? You still got to create and earn that goodwill.
What other kind of sales experience had you had at this point?
None. If you ask my staff, the way I train is listen, no excuses, because I can't sell ice to an Eskimo. Day one, I had to start introducing myself, explaining my intentions, because insurance is sensitive, right? Like, people have to trust you to do business with you.
My name is Barrett Young, and this is the Art of Succession podcast. My guest today is Nakeia Mack, an insurance agent with Oliver Mack Insurance. Nakeia, thank you for being a guest on the Art of Succession.
Thank you for having me, Barrett.
Yeah, I'm looking forward to this conversation. You are my insurance agent, and I'm thankful that you were open to talking about the buyout that occurred about 4 years ago at this point. What is it that interested you specifically about coming on as a guest and telling that story?
And I'm not saying this, with any bias at all. I think that we've had some pretty good conversations, and I think we share a very similar background. And so the invite was an absolute honor.
Oh, well, I'm glad you took it that way. Thank you so much. All right, so let's, I guess, start from prior to buying an insurance agency. Talk about just a little bit of your professional career, and were you in insurance prior to that? Let's start there.
Okay. Long story, sort of short. While in college, I took a job at about 19, maybe early 20s, at a healthcare firm that specialized in complex and custom rehab, where I was like accounts receivable. That's like a shoe into accounting, right? And I stayed there for a long, long time. So in that, I discovered that I wanted to do respiratory therapy to help the company provide additional services. And then I took some like core classes, and of those was accounting. And I'm like, wait a minute, I'm really good at this. And so I decided to change my major, and I transferred to Towson as a junior because I had so many credits from community college. And then I found out that like it was a different kind of accounting. Like, I wasn't really doing good at accounting. I just thought that I was. So I laced up my bootstraps and I did Towson's accounting program. And then I did some studying for the CPA.
Okay, gotcha. And so then this was not right out of high school. Then this is
Nope.
Later on in life a little bit.
Mm-hmm.
Okay, awesome. Love to hear it. Accidental accountant. That's great.
Absolutely accidental insurance agent too. Like, I just, I'm winging life, and historically I've done so. So.
Okay. So you got an accounting degree. You sat for the CPA exam. Okay. And then didn't go into public. Was there something about accounting that you're like, maybe not, or?
That was never my story. I never intended to go into public. I liked accounting. And so my intention was never to go into public. Like it was total happenstance that I got the funding to study for the CPA. And so I said, okay, I guess we're studying for the CPA. So part after part, I'm like, okay, I guess we're going to the next part. It's just, it was a wild ride, but it was totally unplanned.
Okay, I got you. And then did you start in accounting at an insurance agency, or how did you go from I've passed the CPA exam, but I don't want to be in public, to I want to be in the accounting department?
My employer just connected me with being able to do more and more accounting projects until I was on my own with some mentorship.
Okay, so explain that. Who's your employer at the time for this?
My employer was the small healthcare.
Okay, so they were you stayed with them through the accounting degree, through the CPA exam, everything like that? Okay.
Yeah, they gave me the flexibility that I needed. And so instead of seeing me go, they kind of were like, okay, how do we foster this newfound desire to be an accountant. And so basically, a lot of my work thereafter, accounting work, was like mentorships. I did the tax program for Towson. And so a lot, like I started, tax is it's like I'm stronger in tax than I'm audit. Audit is far too conceptual for me. I'm very like yes or no, black or white. And I think you know that about me by now. And so tax was kind of where I went. And then I had so many people, small businesses asking, hey, can you do this? And I'm like, okay, well, I'll try. And then,
Okay, so as the tax partner here, as a lifelong tax guy by accident almost, you love tax, you like tax, but you didn't want to go into public accounting and do tax. So I guess talk to me about that disconnect. I have a disconnect there in my head.
I think when I thought about public accounting, I just thought about like that
tax season. You could say
no,
it.
like I was excited about tax. So for me, it was more, okay, if I'm going to do this, I want to do it all the way, right? So what does it take to become partner? And I'm like, the dynamic of my life would not have allowed me to commit to the extent that it would have taken me to even try for partner. And I felt like I was at the age where it's like partner or nothing. I didn't want to be like,
I got to run a business.
Yeah, exactly.
Okay. So, okay. I mean, we're getting off into an accounting related tangent here, and you're an insurance agent, but I'm interested because you did your accounting program at Towson. They're a big Maryland university. And the experience I hear from others is the only people that recruit at the big Maryland universities are the big four. So was that your perception of public accounting, or were you aware, being through a smaller healthcare company, that there were small CPA firms, that kind of stuff?
No, so you're right. Like the exposure was the big four. And that didn't resonate with me at all.
For good reason.
So it was terrible. More like, I'm going to finish this accounting degree. And then I was invited to one of the leadership academies. And I'm like, okay, let's do that. That sounds fun.
Through at the Leadership Maryland Association?
MACPA.
MACPA? Yep. Okay, great.
And then at one of the days of the academy, I won a Wiley Scholarship. Because otherwise, I wasn't going to pay to study for the exam. It just was never something that I desired to do. But once I got the funding, it's like, I have to do this. I felt like it's so many people who don't get the opportunity, So that's where my studying journey began.
All right. I'll leave it at that before I lose everybody with an accounting related discussion. But okay, so you're at your employer that you had started with, not as an accounting major. You said you'd increased in responsibilities there, and they'd been a great mentor to you. Someone in that organization had really been coaching you through this. How do they go from like, this is a great employee that we've fed into all these years, to you should go leave us and buy an insurance agency? Talk about that relationship.
It actually didn't happen that way. Okay. So I still do work for them.
Oh, okay.
And yeah, so, but I have staff, and so I'm constantly connected, right? We actually had a conversation where my boss is like, you can't like just go, right? Like, we need you around here. So it's more in like an oversight capacity, especially with the accounting skill and the now business owner skill. My input is a lot. It's changed. The dynamic of the relationship has changed. So it's like a consulting capacity kind of thing.
Gotcha. Okay. Side job then. The main job has moved to the side job, and the main
exactly.
And then they put you in contact with Celeste, who you bought her.
No.
Okay. Oh my gosh.
No.
All right.
See, it's a whole thing.
All right. So how did that happen?
One of my small business clients was an agency owner, and they had a relationship with Celeste, and they found out that she was selling. And they're like, I think you guys would be amazing together. And I'm like, that sounds insane. Like, what? So I said, okay. I'm always a person that if the opportunity is bestowed upon me, I owe it at least some exploration, right? So I'm in Baltimore County, and I said, we scheduled a meeting in Waldorf, which took me 2 hours on a very, like, I'm like, I can't believe, like, this is crazy. So I get there and like, I was there for 4 hours just talking about everything. And she told me that she had an offer already. Somebody had put in a letter of intent to the carrier. And she's like, but I think I'm going to rescind that. And she did.
With no letter of intent from you or anything
Right.
other than this 4-hour conversation.
Well,
She's like,
she did. She wanted to, like, she said, well, where are you with this? Because if you're interested, I think this is a good fit. I think you will do very well. And the rest is history.
all right. All right. So, yeah, I mean, just a little bit of context. That's how you and I started working together. As Celeste was a client of mine. I shopped my insurance a couple years ago and came on board with her agency. And then I think within a year, maybe two, you took over the agency. You had no insurance sales experience at this point because you were on the healthcare processing of the forms, getting reimbursed and everything. Is that like the accounting stuff you were doing
Right,
previously?
but more the contractual stuff, like fee schedules and that kind of thing, right?
Okay.
um
What other sales experience other than having a small bookkeeping business on the side? What other kind of sales experience had you had at this point?
None. If you ask my
Cool.
staff, the way I train is listen, no excuses, because I can't sell ice to an Eskimo. That's how I start my training. I think you have to find what you're good at. I am good at learning things and being able to share my knowledge. And that fosters a relationship of trust. So I don't have like glitter to put on words. That's not my thing. I do not, that's not my approach because I do not consider myself a salesperson.
Did Celeste prep you for how much of insurance agency is selling?
No, not like and I don't know how I feel about it to this day. I did not learn that how much sales it entailed until we were live, and I'm like, wait, like this is how it works. But had she prepared me, I probably would have declined the opportunity.
So I assume it wasn't an impulsive 4-hour conversation and then it's done. What was that due diligence process like for you to start to like go home, consider it, say yes, all that kind of stuff?
I started researching like what agency ownership looks like. And then the carrier has their own like super involved process. Like you have to go before a panel for approval. It's not just I'm going to sell this to this person and the carrier's like, yeah, fine. No, like they have to approve you still. So you have to prove financial acumen. You have to prove credit worthiness.
Get your
you have to prove
FINRA series and all that too, I assume. Okay.
And then of course licensure. And you have to be licensed in all the things. So my staff can choose, right? Our bread and butter is property and casualty. So my bare minimum is a property and casualty license. The agency owner has to be licensed in all the things. But I like to study.
If it's sold under your book, then you
Correct.
have to be, able to supervise that kind of sale. So
exactly. So studying for me was the fun part. And then like the life and health portion, I had a lot of I was doing contracts for that kind. So that was easy peasy. Property and casualty, I had no experience in. So, yeah.
Is this, from that 4-hour conversation, how long did it take for you to actually, did you start off as an employee? Did you start off with a purchase and she worked for a little bit? Like, talk me through the 2 to 3 months or however long it might have taken to move forward with the deal.
So I made an affirmative decision in July. And
the conversation was what month again?
July.
Okay, so same month.
Like, yeah, it didn't take me long to decide, like, this is what I want to do. And then still with like a lot of concern about like I literally got anxiety every day up until I opened on December 1st, 21. So from July, I didn't get appointed until November. That's how long the carrier's process is. So there's lots of like, you got to present a business plan. Like, we want to know what your plans are for the next decade. They have to look at, you have to do several background checks. You have to, if you have any debt, you have to resolve that debt. They
Really?
found a parking ticket from 2006 and they're like, go pay that. And you can't settle. You have to pay the amount in full.
Like non-current debt needs to be closed out, or they include like student loans and things that are
Student
being paid
loans,
on?
as long as the student loans were not like, I'm not entirely sure of the criteria for like debt that is like not, that is current, right? But for like any kind of collections, because with the SCC and with FINRA, you can't be compromised in a way that like having debt where people could leverage that, I guess is the logic. So if you owe people, they don't want you owing anyone, essentially. So I had to pay the parking ticket from 2006 and 2021. And I called the courthouse and they're like, what? Like,
Just trust me, I need to pay you. Just let
I
me
gotta
pay
pay it. And I gotta pay the entire amount. So
Wow.
don't do me any favors. Yep.
Okay. And so this is an asset sale. So you weren't buying Celeste's agency, you were buying her goodwill, her client list, all of that. So you had to start up an LLC, and then the name of your business was Oliver Mack Insurance. So why? So I prepped you for this, but why Oliver Mack? Who's Oliver?
Oliver is my family name, and then Mack is my married name. So, like I shared with you offline, I am one of the first business owners in my family. So I wanted to give my family some connection to my business. Mack is my married name, so of course my kids share that name, and so I wanted to kind of make that connection for everybody.
Okay. In a relationship business, when you're taking over from somebody, I mean, how did that? Hers was Conyers. How did that?
Conyers Ward.
Conyers
Yes.
Ward, which was her partner or deceased husband. I can't. Neither. Okay.
So later, it's funny that you bring that up. Later, I found out that it was conventional that the succeeding agent attach the previous agent's name to their business.
Okay, so it should have been Mack Conyers Ward then to show some continuity there. I mean, it's CPA firms. We used to have 7 names at the end of our name.
Right. And so I didn't intentionally omit anyone. I just didn't know, right? And I'm like, I felt so bad, but this was like 2 or 3 years in, and I'm like, wait, I was supposed to do that.
Oh, okay. So she never brought it up. She never said.
No. So it wasn't intentional. It was just, I just didn't know. I didn't know that it was it's no written
It's a
rule.
tradition. It's
right,
like
but
honoring
it's a common
and stuff
practice.
like that. Yeah, gotcha.
Yeah.
Okay. So was that tough to transfer? I mean, because this is what I really want to get into, and this is, we're both in relationship businesses, and it's like my relationship was with Celeste, and unless you were an employee there and I got to know you as an employee, it's like, well, who's this person? So
Yeah.
talk through some of that and just the successes and maybe some struggles.
So Celeste's book was about 36 years old when I took over. So there was a lot of challenge in creating trust. You can buy goodwill, but that doesn't mean that it exists, right? You still got to create and earn that goodwill. And so a lot of our clients were like, I just don't. And so statistically, when you purchase a book of business, it is anticipated that about 5% of that book falls off due to the acquisition.
Just we're going to take a chance, shop shop new rates and stuff.
Yes,
Like I said, I have a relationship with Celeste. She's not here anymore. I'm going to take this chance to look around.
exactly.
So even with a national brand like you work for, there still is very much that this is my insurance agent.
Yes, absolutely, absolutely. Even in my business today, there are clients that will not talk to my staff. They'll call in. It could be a payment, and they're like, "Nope, I need to speak to Nakeia." So, and that it is, it's a blessing and a curse. So yes, it was a bit of an uphill battle, but I don't think it was as much of an uphill battle as I anticipated. I was prepped for that.
Okay. So more than five, I mean,
We did not
that's
lose
the average.
5%.
Oh,
We
really? Okay.
didn't. I don't even think we lost 2%. I think I was a bit proactive, and so the carrier does dictate how you can communicate the acquisition. Um, it's almost for continuity. It's almost not discouraged, but you have to be very intentional about how that acquisition is communicated. And so I had to do a whole lot of like reaching out once I at closing, like after like day one, I had to start introducing myself, and basically explaining my intentions, because insurance is sensitive, right? Like people have to trust you to do business with you. And so nobody likes the idea of, oh, I was just assigned to you, right?
Yeah.
So, and the book of business is a good sized book of business. And so I had to come up with a plan to be able to, have those kind of conversations with a good portion of. Now I have some clients who to this day I've only spoken with once, and those are the people who are okay with binding a policy online. But the vast majority of that book are people who have been with the carrier for 36 years. And so those conversations were required. And, just nurturing those conversations and those relationships, like they still have to happen to this day.
Yeah. So you said it was an uphill battle, but then you also said you had below average turnover. So what was the uphill battle about it?
The uphill battle was combating the notion. So people will say, I didn't experience increases until you took over. I don't get to determine the increases. But it was also, we were taking a turn industry wide around the same time, right? So it was a perfect storm where increases every renewal period. It was a fairly new concept, right? Like prior to COVID, you weren't seeing an increase every single renewal period. And that still is not always the case, but I'm sure that you can attest to the fact that renewals bring increases far more often than, let's say, a decade ago.
I gotcha. Okay. So it wasn't, yeah, it was just the conversations selling to people who've already been sold to. It's not so easy as like, oh, well, they've been a client of hers for 36 years. They're going to be a client of mine for 36 years. It's like, no, every 6 months you're going to be selling
Absolutely.
again. So
Absolutely.
yeah, I gotcha. Okay. You have staff now. At the time, did Celeste have any staff in the agency?
No. So at the time, we were just coming out of COVID. And I think there was, the carrier did allow agents to go remote completely. And so with that, Celeste was just kind of a one-man show, and she didn't have any staff. So I didn't acquire any staff. My staff has been built by me.
So I know the buyout. So you said the transition is governed by the national brand. The buyout, though, is negotiated between you and Celeste. Like, do they weigh in on amounts or any kind of stuff like that, or
There are
earnouts, or how long she has to stick around in order for that? Anything like that?
Mm-mm. So the financial piece is between you and the seller. There are industry metrics. So for instance, the book of business is,
To help you value it, then
correct.
there's
Valuation
standards.
is,
Yep.
yes, exactly.
Okay.
Exactly. So depending on the climate, right? Or even the variations in the different metrics year over year, because I had some accounting experience, I was able to say, hey, this is a negative variance. Can you explain why? And, why this would be favorable. And Celeste was so transparent. Like, I hear horror stories, but there are industry standards for those metrics and how to value the book.
Okay. Gotcha. And did she, I mean, part of that buyout, was she going to stick around for 6 months? Was she going to stick around for a year? Was it?
She tried. The original plan was, I believe, maybe 2 months. And
Okay.
then,
So January and February, like a, okay.
but the first 2 weeks she agreed to be an agency. And then she was like sitting by her phone. And for the first 1 or 2 weeks, I would call and say, hey, what is it? Like, I was starting from literal ground zero. Most agency owners, are like, it's a legacy kind of business. Dad was an agent, granddad was an agent.
Or you worked there for a couple
Or you
years
were
and
an
then they
LSP.
retired. And
Yes.
Yep. Okay.
So, I would ask all the foundational questions, and after maybe 2 or 3 weeks, she had to text me, and she's like, "Are you okay?" Because she wasn't hearing from me. So
Okay. So you got all your answers.
right. So she planned on being around for a while, and we still, like, I talked to her regularly. I was just with her on Friday, so the relationship is not just a business relationship, and I'm so grateful for that. But I had to tell her to go to a beach like 30 days in. I'm like, why are you still here?
It's
gonna be okay.
Yeah.
Right.
Awesome. Is that standard? I mean, that quick
No.
of a turnover? What's the standard within your organization usually?
I think it depends on the transition. So if it were like an employee, then I think the transition is probably a lot easier and more expedited. But I know agents who don't talk to their seller at all. They don't know where they are. They don't, So, like, I think our dynamic is definitely an anomaly for sure.
Remind me, before that 4-hour conversation, had you met her?
No.
Okay,
No,
awesome.
no, so I might have received a call on like Wednesday.
Just to get directions and confirm an appointment,
Yes.
kind of thing.
And then I was there on Saturday, and like an hour in, I'm like, I think I might turn around. This is actually crazy, because how could I possibly do this daily?
So I want to shift into, now it's your agency. So what were those warning signs, or not warning signs, but just what were those things that were at the back of your head? Like, can I do this? What, did those fears become reality? Did it play out? How were they like squashed? How did it?
I think
Tell me about your first year.
Those fears happen on a continuum.
Okay.
Different things present themselves with every quarter, right? The accountant in me is like, okay, it's first quarter, I'm preparing for fourth quarter. But then, like, the industry changes, regulations change. Like, so there are different things that drive our success, right? So if you like purchase leads, there are some FCC things happening right now as it relates to leads and how, so in the beginning, most of my fears were around my ability. Those did not, like, I've shocked even myself, because again, I went into this like, I don't wait, there's sales involved. Like, nobody, like, I know there's no way. And then I found my rhythm, because there's a lot of learning in insurance.
And you like learning, for
I
sure.
love learning. So, like, one of my agent friends was like, can you leave the accountant at home? Because most insurance agents are very gray. They live in the gray. And I'm like, wait, well, no, how this, like, I literally would go into, like, we have a rules and rates library, and I would go in and try to, like, calculate premium by hand.
Mm-hmm.
Like,
to
looking
confirm
at the different
somebody's quote or something like that.
rating factors, right? So, and they're like, no, literally nobody does that. Like, you should stop. You have better things to do. But I think my background actually assist me a lot because I'm not gray. And so I need the answers. I need to understand, risk management policies. I need to know what makes this rate do this or that, right? Because you could receive a quote from another agent right up the street and our rates would be different. Because like I know, okay, these are the discounts. These are the things that apply. It takes some kind of, like, they call it field underwriting. It takes knowing the questions to ask to make sure that you are properly presenting protection. So I guess to answer your question, a lot of those fears were around my own ability. And I like now there are more around the business and how to pivot when necessary.
I hope that you've enjoyed part 1 of my discussion with Nakeia Mack. You can watch part 2 of our interview linked right here. We have new episodes twice a month, interviewing business owners with their own succession stories. If you'd like to be a guest on the Art of Succession podcast, you can find our interview form in the show notes below. If you've enjoyed this episode, please share it with others, and I want to thank you for watching The Art of Succession.